Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So as you all know, today is Tuesday. We have had a lot of data as well as news announcements coming up in the markets. And as we enter into the New York session, there's quite a lot happening. One of them is that we just released retail sales data from the US as well as Canadian CPI data. So we'll jump right away. But before we do that, I would like to begin with a mic test. So if you can hear me clearly, then type hi on the live comment section, and these will confirm that everything is working just fine. So as you can see from the economic calendar, today being Tuesday, there's been quite a number of announcements. One of them is Westpac consumer sentiment data, which came in as a negative from Australia at 3:30 a.m. Then we had a host of Chinese data, including fixed asset investment, which came in lower than expected, yet positive. Industrial production improved from the previous month, so 5.6% is way better than 3.9% that we saw in March, though it's lower than the expectation of 10.9%. So Chinese retail sales came in slower than expected, 18.4%. We were expecting 22.0%, but the previous reading was 10, so this was an improvement. And the unemployment rate in China dropped from 5.3% to 5.2%. Then we had the big surprise in the UK at 9 a.m., where the number of unemployment claims came in higher than expected at 46.7 thousand jobs. We were expecting that 1.2 and the previous reading was 26.5, basically indicating that the job market is getting worse in the UK. So average earnings index came in as expected at 5.8%, while the unemployment rate went 0.1% up to 3.9%. So German economic sentiment came in at negative 10.7, indicating pessimism in the German economy. Then flash employment change in the Eurozone indicated a stronger job market where there was a rise of 0.6% over the last 3 months ending in March 2023. So flash GDP for quarter one came in at 0.1%. It was a significant growth, but a slowdown compared to the previous readings. So it's not yet very healthy to say that the European economy is expanding well. So trade balance came in at 17.0 billion. This was an improvement from a previous contraction of negative 0.2 billion. And then the ZEW economic sentiment for the Eurozone also came in lower than expected, basically indicating economic pessimism. So the most recent data came in at 3:30 p.m. And this is a Canadian CPI, or Consumer Price Index, which is a broad measure of inflation in Canada at a strong 0.7% compared to an expectation of 0.5 and a previous reading of 0.5. So median CPI came in slower than expected at 4.2%, but trim CPI was also a big jump to 4.2%, which is higher than the expected 4.1%. So as for the US, which was the most important news for the day, we saw core retail sales dropping to 0.5%, rising to 0.4% compared to the previous contraction or drop of negative 0.8%, whereas retail sales also rose 0.4%, but then this was lower than expected. We were expecting 0.8% growth in retail sales in the US. So as a result of these, we have seen several reactions in the market. So we'll be looking at that to see what actually transpired. So first things first, let's check if you guys can hear me clearly. Hi Alvin, hi Abel, hi Charles, Joe, Vandy, and Wimab. I hope that's the right pronunciation. So for the charts and how the markets reacted, I would like to begin with the dollar index. So the US dollar index opened the day slightly bullish. So if you go to the 15-minute chart, you can see it was slightly bullish. And then midday went further back downwards before spiking during the news announcement. So the small thin candlestick here represents that 30 minutes ago when the news announcement was made. So there was a big spike upwards indicating that the dollar was strengthening, but then later it weakened, and now we can see it moving in the opposite direction. So perhaps the highest volatility that you have seen has been in gold. So gold prices managed to spike downwards before reversing and spiking upwards, and now there seems to be some form of retracement. So if you look at the 1 minute chart, you can see the violence that was happening here. Market shoots up and then down and then all the way up and then back down, up, down. And this is the current price level after the announcement. So as you can see, we had some volatility early in the morning towards the open of the London session. And now in the New York session, we had a very nice bounce here. So one key thing to observe in the price of gold is that one particular trend line has been holding on quite well. And this is the trend line that is based around the price level of 2001 dollars per ounce of gold. So we managed to see some great support happening around this area here. Then the same support was tested a second time here. And now most recently, early this morning, it was tested at that time. And then today during the news announcement, there was a fourth test of the same support level, which seems to be a strong basis or a strong foundation for a potential movement upwards. So from the 4-hour chart, you can see the last two candlesticks managed to test the price level successfully, that is 2001 price level. So eventually the candlestick closed as bullish, indicating a rejection of lower prices. So potentially we could be seeing gold managing to stage a comeback from this price level. So it's not too late to call it. So you have to at least wait a little bit and see. So from the current price action, especially from the current hour, we are seeing some form of pullback, the market attempting to go back down there. But every time the market has hit the 2001 price level, there seems to be a very strong rejection, which is an indication that the price could rally, and potentially we could see gold going all the way up to the price level of 2035. So that's a reality that could be playing out. So we have to be ready if in case it happens, then we basically grab all the pips as the market goes up. So I don't know yet whether the market will eventually do that. So from the 5 minutes chart, there seems to be a lot of volatility here. Market attempting to push down several times, and each time bouncing. If you go to an even smaller time frame, then you'll get the clarity and you'll see the rejections even happening on the 1 minute chart. So there is a good chance we'll be seeing gold continue to peruse or pursue even higher prices. And as for other currencies, we could be seeing a similar story. So for pound USD, we had a very strong reversal here happening yesterday. So the entire day, the pound USD was bullish. So today, we had bearish momentum before we saw the news in the UK, basically boosting the pound again. So the pound made a recovery. And then after the CPI news, this is when we had a sharp drop resulting from the strong dollar that we have just seen here on the dollar index. So the dollar index managed to be very strong during the news announcement, but immediately after the news announcement, you can see some weaknesses, and it seems like yesterday's trend may be continuing today. So if you keep on seeing this particular trend downwards, I'll try and zoom this. So if the market keeps going downwards for the dollar index, then there is a good chance we'll be seeing other currencies recovering. So the pound could be finding support around 1.25 price level, and we could be seeing some further upside. So we already rejected yesterday's high, or this was Friday's high. So we have tested here, the market has pulled back downwards, but then if we see the market going back up again, then our target will be 1.258. So this may be a really nice target, especially when we see signs of bullish momentum here. However, if the dollar index remains strong and we keep seeing this bearish momentum, then yesterday's low might be a target for pound USD. So as you all know, these sessions are not investment advice, neither are they a recommendation to trade. So they are always purely educative to help you understand some key price levels. And of course, you should always do your own due diligence. So yesterday's target was made today, early in the morning. That is for New Zealand USD. Before the market pulled back down, managed to reject lower prices, attempted to go back down again for the last 3 hours, but then rejected lower prices. So there seems to be some form of range here, market going up and down and up and down. So we don't know yet what will transpire, but it seems like a pattern is shaping up here. So if you look at this high and this high on the 15 minutes chart, this low and this low, then it seems like some form of consolidation for this pair. So as for Euro USD, made a very good rally yesterday, didn't get to our target of 1.091. So traded sideways throughout midnight and early morning, then made another rally, attempted to drop again during the news, and now it seems to be continuing to win against the dollar. So potentially our target of 1.09 remains a nice target. So we could be seeing this playing out for the day. And also for the week, we could see even higher prices at 1.09420. So as for USD CAD, this is where we had a mixture of news. So one of the news strengthening the Canadian dollar, while the other one was weakening the US dollar. So it made a very nice spike, continuing yesterday's pullback. So today we are testing a target that we had identified yesterday of 1.341. So now it's time to sit back and configure our projections and see whether the market will continue this momentum and lead to the previous low, all the way down to a price level of around 1.33222. However, if there seems to be a bounce here, then it could be going to today's high. So it's a wait and see kind of scenario. Remember, a majority of the momentum has already happened during the news. So now we wait and see. So USD JPY was making quite a pullback here. You can see that the pullback was having a lot of struggle. It wasn't a very clear pullback. And now you have a break towards the upper side. So we had a nice triangle here, shaping up very well, and the market has made a break. So as we all know, whenever we have such a clear technical pattern, then the idea is to trade higher, with the target being the size of that particular triangle. So in this case, if I were to use my 1 hour chart, then I would say the size of the triangle is right here. So from the break, we should be seeing a target along this area. And this is a price level of 136.5 for the USD JPY. So perhaps there's room for some further upside in this pattern as we look at another leg towards the upper side. So as for gold, as you can see, lower prices are being rejected. So potentially getting to the previous high and even cruising above that and getting even higher. So for now, the target remains here. So the shorter term target is one resistance that has been holding on quite well at 2021. We can all see these price levels and how significant they have been over the last couple of days. So for AUD/USD, same case, we can see the Australian dollar made a very good rally yesterday, but then today has been dropping significantly. But then from the last couple of candlesticks, then you can see the amount of rejection of lower prices that's happening based on these candles. So we could be seeing the AUD/USD make a strong comeback and perhaps retest today's high as well as yesterday's high. So equities seem to be really weak. So whenever you see retail sales going down, means that people are no longer buying products as they were buying, especially after the removal of COVID-19 lockdowns. So Americans went on a shopping spree, which boosted stocks really well. But then what we are seeing here is a very weak retail sales. And when retail sales are weak, then we know that companies are not going to be able to make as much sales. So as a reaction to that, we are seeing equities take a deep dive. So from SP 500 to the NASDAQ and also to the Dow Jones, all of them seem to be on a sell-off. So in this case, if we happen to see another sell-off, then another target would be yesterday's low, which is all the way down. So we could be seeing the US Tech 100 drop further down. Also notice it just rejected a major resistance here. So you can see the technicals here indicating a rejection of that resistance level. So for SP 500, if I go back to my 1 hour chart, then you notice that some form of trend line is prevalent here, where the market has been rejecting higher prices every time it gets there. And it seems like this just played out here. And then from this area, you can see that price is now seemingly dropping down further. So for the Dow, it's a similar case. There seems to be also a prevalent trend line here, which was slightly broken here, but then it seems to be holding up quite well. So every time the market gets close or to that trend line, then we are seeing this effect of the market pushing down even lower. So a key thing to notice is that the downside may not be as promising as much. So it may be short term. Same case for US Tech 100. So if you look at these trend lines here, they are not very promising for some very strong downside. So the markets seem to be trading within triangles. So even for the S&P 500, there seems to be some form of triangle here, where the last couple of lows seems to be rising and the last couple of highs seems to be dropping, forming what looks like a triangle. So for SP 500, if you are to use a 15 minutes chart, then it would make more sense to notice that these swings are getting smaller and smaller. So you should be careful of that. And of course, watch out for any kind of breakouts. So now that we are through with that part, I would like to move on to some more content for the day. First, let's begin with a couple of things. The first thing I want us to see as a highlight is a Home Depot stock. So Home Depot is one of the biggest American companies in home improvement. So they provide home improvement products to the retail sector, and they tend to be doing well, but then they had some earnings released today and they missed expectations. And these were the biggest miss in 2 decades or in 20 years. So it was the worst revenue miss in 20 years. So the outcome was as follows. The earnings per share were $3.82 and the expectation was 3.8. So this was an earnings beat. So it basically beat expectations. But then the revenue it made for the quarter, it was lower than expected at that $7.26 billion compared to an expectation of that 8.28. So following that, there was a big sell-off, especially pre-market at 2.77%. And after the market opened, you can already see that the stock is down 2.64%. So that's one key thing to notice. So when you see retail sales missing expectations, and then one of the biggest companies in retail sales in the US also missing expectations, then it's a red flag that there could be cracks happening with the American consumer. So other couple of charts I want us to look at today is one, commercial real estate prices in the US. So as you can see, they've been on rise for the last couple of months, but in the last reading, there was a huge drop and we could be seeing some further continuation along that trend. So another chart that I feel is very important and relevant to our presentation today is the US unemployment rate. So it was the highest during the COVID period at around 15%. And these were as a result of the lockdowns that were implemented in the US. So since then, we have seen unemployment recover and kept going down up until we got to pre-COVID lows. So the pre-COVID levels were around 3.6%, but then unemployment has continued to reduce. And in the most recent reading, it was at 3.4%. So 3.4% is a 40-year low for the US, actually a 50-year low. And what this means is that the labor market in the US is currently very tight. So a very hot labor market basically implies that the demand for labor is way higher than the number of people available to take on those jobs. So one of the reasons we have seen being mentioned, especially by the FOMC members, I remember the Fed member Kashkari talking yesterday. He basically mentioned that during the COVID period, the US lost about 1 million people to the disease. So about 1 million people died out of the pandemic. And this was a significant hit on the labor market. So at the same time, we all know it was very difficult to travel to the US out of travel restrictions were implemented as a result of the pandemic. So the US economy missed on a lot of immigrant labor. So whenever people move to the US, mostly is to find jobs and improve their lifestyles. But then this also serves as an addition to the labor market in the US. So during the COVID period, 2020, 2021, there was a very big shortage of immigrants in the US. And this led to a significant effect on the current hot labor market that they're experiencing right now. So besides that, also population growth rate are really slow for the US. So also population growth is a big factor in the labor market. So now we are in this situation where companies have to keep raising wages in order to retain talent. And whenever wages are going up, it basically means that the inflation problem gets even worse. So the Fed was looking to tighten the economy up until the unemployment drops further. Starts rising to around 5%. But then what they are seeing is record unemployment lows, and this is not very pretty for the Fed. So they might have to do something on their June meeting, and perhaps they'll go for another rate hike in order to push inflation rates towards their target number of 2%. So another chart I want us to look at. This is the US average hourly earnings. So the earnings were highest during the COVID period when people could not work. So in order for you to get someone to report to your job, you had to pay them better. This is the period when we had essential employees. Then immediately after that, people did not have a lot of cash, so they needed to survive. So when the COVID-19 rules were removed, then we saw earnings dropping because there was excess labor, and then the curve normalized around here. So this has been playing above zero for quite a period. And eventually you can see here that there's a sharp rise that is currently happening. So in the most recent trading, there was a big spike of average hourly earnings of 0.5%. And this is a big problem to the Fed. When people have more money, they buy more stuff. And this leads to more inflationary pressure. So this is one of the key things that the Fed is trying to address. Then we have manufacturing production, which has been weakening. So it dropped during COVID and then rallied during the reopening. So through 2021, when the US was printing more money, then manufacturing production was expanding because demand was really high. But then it cooled off around second quarter of 2021, kept cooling down. There was a big spike in early 2022 before the manufacturing kept on weakening. Remember, this is when the period when we had very high energy prices, and now it seems to be keeping on going down. And in the last couple of readings, it has really went below the zero level. So manufacturing production in the US decreased 1.1% year on year in March of 2023, following a 0.2% increase in February. So while Feb was quite positive, March was a further drop, and now we are seeing manufacturing in the US contracting. So that's yet another crack in the US economy. And also, when you look at retail sales data, this is the one that you have just looked at. It sank 0.6% month over month in March 2023, following a 0.7% fall in February. So two more charts. One of them is the Fed balance sheet. So the Fed balance sheet basically indicates the amount of money in circulation in the US economy. And clearly you can see there was a big spike in 2020 as the US was printing more and more money. 2021 kept going up, and then the entire of last year, the Fed kept on tightening. This is when the Fed was hiking interest rates in order to control the rising inflation, and this was expected to contract the Fed balance sheet. So the balance sheet had contracted by around, I would say, 600 billion before it spiked up after the formation of the BTFP program to protect the banks that were collapsing. But then now it seems to be resuming the trend of dropping. But still, it's still a number that is way too high. And all this money that was pumped into the US economy is expected to be removed by the Fed, else it makes the inflation bigger. Whenever you have excess money chasing after fewer goods, you know that the result is inflation. So unless the Fed reduces this bubble and removes all this money from circulation, then we will be expecting to have a big inflation problem going forward. So then we have the United States inflation rate, which was very low, especially in 2020, before it rallied for 2 straight years, basically peaking in June at 9.1%. And once the Fed rate hike started taking effect, we saw inflation contract month over month for the last 10 months consecutively, up to the last reading, which was 4.9%. So the Fed's inflation target is 2%. So there's more room to go. So they need to drop this inflation to 2%, which basically implies that there's room to drop this number by 2.9%. So this is something that Jerome Powell is very focused on. And he said he will stay the course until he gets to this target of 2%. So the threat of tightening the economy further is the one that is strengthening the dollar, whereas maintaining a stranglehold on US equities. So the last chart is interest rates. So as you can see, interest rates were held significantly low, very close to zero at 0.25% last year. During the COVID year 2020 and 2021. And then last year, the Fed started hiking interest rates. So kept going up to the current level. In the last meeting, the Fed hiked by 25 basis points, eventually pushing interest rates to 5.25%. So the last time we saw these kind of interest rates was just before the global financial crisis of 2007-2008. This is when we had interest rates at around 5.50%. So in this case, the interest rates are really high and something is about to crack. So if you are very bullish on equities, you should be very much aware that very high interest rates have a big effect on consumer spending, on mortgages, as well as on credit card debt. And this basically has the effect of weakening the economy and eventually leading the economy into a recession. So this was the fastest rate hike in history. And now that we are getting here, it has become a big problem as more and more investors bet that the stock market will potentially collapse within the year. So it's a big risk that everyone is considering. And you can see the signs in the rally that we have seen in gold as well as on Bitcoin. So that's it for today. We also had monthly retail trade data coming from the US. As you can see, monthly retail sales were 686.1 billion, up 0.4%, whereas business formation statistics were down negative 4.2%. I think it's the same data that we've already gone through. So this marks the end of our session. I'll be checking on the questions that you guys have, and hopefully I'll be able to respond to those questions right away. So hello, Patrick, Gitere, Tom, and Hazel. Thank you guys for joining the session. So I'm checking to see if there's any question before we end the session. So it seems like the dollar index is quite resilient. So it has made quite an impressive comeback over the last 3 hours. So if this trend continues and the dollar keeps on strengthening, then the opposite effect is expected in these other currencies, where pound USD could continue weakening, New Zealand USD could continue weakening, and also Euro USD could continue weakening. USD JPY could continue weakening against the dollar. So these may become quite a reality. And also the price of gold could continue weakening. So we could potentially see a retest of the 2001 price level. So same case as Audi USD. So if the dollar index keeps on strengthening, then a test of yesterday's low might be in play. So we just have to be quite observant of the price action that happens in the New York session over the next 1 hour or so. So as you can see with equities, they were dumping, but now they seem to be holding on quite well. Same case for US Tech 100, dumping in the last 1 hour. So perhaps a continuation further. And also for the Dow Jones, it was dumping, seems to be holding quite well for the last 1 hour. So it's basically a wait and see until we see some potential opportunities in the markets. A good question, has the dollar bottomed? So I wouldn't say it has bottomed per se, but from the dollar we are seeing, from the fundamental analysis, it's indicative of a relatively strong economy in the US, which basically points at a direction where the Fed could go for another rate hike. So just focusing on the dollar index, remember we had the bottom happening here at 100.8. So for 1, 2, 3, 4, 5, 6, I think for 6 straight days, we have seen the dollar being really good. Yesterday was the first main significant day we saw the dollar index weakening, but then today there was a continuation of the same before it bounced, and from the current price action, it's indicative that we could be seeing a continuation of this path. So remember, this bounce here and rally last week led to a break of a major trend line on the 4-hour chart, where the dollar was trading in a triangle and moving sideways, or basically consolidating to an area where the dollar is now gaining against other currencies. So yes, I would say there's a good chance the dollar has bottomed and it may continue to bury other currencies. So while some of the currencies were at highs, so for instance, if you look at New Zealand USD, it was on a major high, then it dropped sharply, made some recovery when the dollar was retracing, and now we could be seeing some further downside. So we could be watching in the market to see for more data to indicate whether it's really true that the dollar has bottomed. So if it has bottomed, notice the chart on Euro USD, the breakout, the retest, and the continuation. So there's a good chance we'll be seeing the dollar remain strong in the markets. And if this happens, then charts such as Euro USD should be retesting recent lows, where the dollar could continue strengthening against these major currencies. So this drop to 1.08436 might also be in play. All right, guys, thank you for your time. Thank you for taking the time and to participate in this session. I hope you enjoyed it. If you have any comments, you can leave them on the comment section. Remember, the YouTube session is recorded, so you can access it anytime you want. Tomorrow, we'll be having a new episode of the Bullish Banter podcast. It will be available on all platforms. This is Apple Podcast, Google Podcast, Spotify, as well as on YouTube. So whenever you have some time, just jump in and learn what we covered over the last 1 week. So see you guys tomorrow at 11 a.m. when we focus on the